Candle Range Theory Trader back with you with another video just showing you the 4 must-have Candle Range Theory entry models to help take your trading to the next level. Let's not waste time and get right into it. What this video is going to cover is the 4 Candle Range Theory entry models and who they're for. Not every model is for every trader, but I promise you'll find one that works for you and your style. We're going to go over what each entry model is and some real-life chart examples. So here are the 4 entry models. Okay, all of them are all explained on this channel, but I'm just going to go over them real quickly, and then you need to base your decision to decide which one is for you. You're going to be basing that on the information I'm going to share with you, and you'll just see how to fit that into how you're already living, already into your current lifestyle. The first model is the small daily range model. This is ideal for swing traders. Okay. The second model is the 4-hour ATR candle model. That's for day traders. The 1-hour scalp method is for scalpers, and it can also be for day traders. And lastly, the ATR daily range, that's going to be for swing traders or day traders. So let's look at these in more detail, and we'll have pictures to actually accompany them. So this is what the small daily range looks like. This is a daily chart to the right, okay? So we see our range candle right here where my cursor is, okay? This candle here, the body of the candle is only about 35 or so pips, okay? So we're looking for small bodies on the daily chart. That's the first thing. But the body can't exceed 50 pips. And of course, the ATR candle indicator is going to help with that. If you don't know what the ATR candle indicator is, you need to go to the description of this video. There's a video explaining all that. So next up, the money candle must poke above the prior day's high or low. In this case, it will be a short example because it poked above the range high and then closed back inside of it. So we're not trying to actively trade this day. This day must play it out. So this is like a 2 candle pattern. 1, 2. This is like could be Thursday and then Friday. And then here's Monday. This is your trading day. You could have got in either close to the close of this day here or on the daily open right here. And as you can see, price pretty much tanked to the bottom of the range. Okay, range top, range bottom, and that's your take profit down there. Okay, so the take profit being at the low of the range, that would give you 2 days. Your take profit would have been hit. You would have been done. But the key, the number one job of every candle range indicator, or every candle range theory trader, is to identify what range you're trading. Okay, are you going to trade a small daily range? Maybe you want to trade this type of range, which is the 4-hour ATR candle. Okay, here are the rules for this one. You must have an ATR candle. Okay, and again, if you don't know what that is, check the link in the description. The video will explain that. For that indicator you'll need to find ATR candles. All right, in this case, it's a blue candle, which means we're going to be going long. The average true range for this time frame, which is 4 hours, has been exceeded. That's why it turns blue. Okay, so say that the average true range was 50 and price moves, you can say 80 pips in 4 hours instead of 50. That's more than the average range. So it turns a color. So it's a signal that, hey, there could be a reversal coming up here, all right? Or at least a pullback, bare minimum. All right, so next we'll need to see our money candle. Money candle for these can be on the 4-hour or 1-hour chart. All right, so as you see here, this is just a straight 4-hour chart. 4 hours down, 4-hour money candle will price spike below it and close back inside the range. And then your entry would be right here on this candle open and just ride it up. And this would have been 4, 8, 12 hours to profit. All right, done deal, nice and easy, simple and clean. But it starts with identifying maybe you want to change 4-hour range candles. You can do that. The next one is for my scalpers out there. I must say I've really enjoyed trading this method. I said I was a day trader, but I might be more of a scalper than I realized. But in any event, the 1-hour scalp is for those scalpers that like to be in and out of the market. You're not holding anything overnight. You just want to get your money and go on about your business. So the rules for this one, the ATR candle must show first on the 1-hour chart. Okay, so the candle's going to turn blue or yellow or whatever your settings is. That's going to determine what color the candle will change based on how you set up your indicator. Okay, so that's going to go first. Next, the 1-hour chart has to show in the next hour a money candle that has to poke below the range and then close back inside of it. All right, once you see your money candle in the next hour, then that's when you're going to start trading. But the catch to that is this. The money candle has to be at a key price level. What does that mean? It has to be at the high of day, low of day, high of week, low of week, or the weekly open or daily open. Those are the key price levels. There is a video talking about price levels on this channel. So if you want to get more information on that, definitely look at that video as well. And your take profit here could be in the middle of the range or the high of the range. Sometimes these break out, but your safest bet is to just have this take profit at the top of the range for a long example, or if you were going short at the bottom of the range, that would be fine. And the last entry model would be the daily range. So the daily range is pretty much just like this 4-hour range, except it's on a daily chart. Okay. So the daily chart has a big old candle here. Okay. The average true range for the day has been exceeded. So let's say the average range of this candle was 100, but it went up 150 pips for the day. Okay. The next day, so let's say this is Monday, and then Tuesday price pokes above and then closes back inside the range. Okay. So then Wednesday, this is your trading day right here. And this would have been Wednesday, Thursday, and Friday. Okay. So this in theory could be a week. So this would be good for swing traders. You check the chart once, you set your stop loss above the money candle, take profit at the daily candle's low or the range low, and you're done. You're not checking the chart again until Friday. All right. So remember though that the money candle must appear either on the daily or the 4-hour chart. In this case, we let the whole day play out, and this was our money candle here. This is the perfect money candle, more or less, that closes close to the range where we want to get in. And when you're trading the candle range theory, your expectation is that price should not go back outside the range once it closes inside of it. All right, be it long or short. Right here, again, once price closes inside the range, we should not see price then going back outside of it if you're long. Same principle, okay? And then, like I said, take profit, bottom of the range here. So that worked out beautifully. Okay, so just mastering one can earn you a decent living. You do not have to know how to trade all 4 of these models. Let's just say, hey, look, I want to be a scalper. Then you just trade this. I'm a day trader, or better yet, if I work full time, I have a family, I can't be on the charts all day. You want to trade this. Maybe you're in college or high school, and you got time between classes, not during classes. Okay, maybe you want to trade. Maybe you want to scalp the market. Okay, check it every hour on the hour. Get in and get out. Okay, so it's up to you, but you don't have to know them all. So in conclusion, these are the only models that I trade. Nothing added, nothing taken away. All right. Make the model fit your existing life. Okay. Don't try to find a method and then fit it into what you already got going on. If you're not able to really trade at work, okay, if you got a full-time job and your job doesn't even let you use your phone or have a computer, don't quit your job to say, okay, well, I think I understand this method, so now I'm going to quit my job so I can be on the charts all day. That's not how this works. Okay. I don't do this full time. Okay, but I'm self-employed, so I do have the time to check the charts more often and alert trades that I set up on something that I'm going to show you a little bit later. So be sure to fit this into what you already got going. Okay, but you can live trade just one model, and then you can demo trade all the others until you're comfortable with it. Then if you want to add something to your repertoire, so be it. It's your business. You run it as you see fit. But though all these models are different, they're all under the umbrella of the candle range theory. So don't get it twisted. Okay. This is still the candle range theory at the end of the day. So experiment, but feel free to just, add your own flavor to things, play with different time frames. But the range is the foundation of this theory. You need to define your range. Okay. Is it an ATR range? Is it a small body range? What's the range that you're trading? Okay. That's the foundation. And then from there, the money candle, and then take profit, stop loss. That's it. Simplest trading plan you're going to see. So thanks for watching. Please subscribe, and your trading will never be the same. One last surprise for you as well. If you want to see the live trades that I do take, I put them here on my Twitter. You can follow me right here at CRTTrader77. I call out all the live trades that I do. Do not treat this as a signal service because I don't do that. Okay, I don't give signals. This is pretty much my own trading journal. For instance, the trade I took today was a GJ long using the 1-hour scalp method. I will tell you what methods I use. And then the results. Okay, so this was a winner. Now I call it out in real time. This was 3 hours ago. And then 1 hour ago, I got out at the mid-range. Okay. This was, I share some memes sometimes too. But for the most part, it's my chart. That trade's still playing out. This one here was, let's see. Where's the other one I took? Yeah, this one here was dollar Swiss. This was from yesterday, February 5th. Using the 4-hour model that I just went over, okay? So the entry, see how they got the money candle right here, poke below the range, close inside of it. The ATR range is here. And then the general result is that the range was completed right here. Okay, and to update them, I tell you when I set the stop loss to break even, etc., etc. But this was the result. Okay, you see here the entry stays the same. This was the entry. Okay, so this was the entry on dollar Swiss. This was the result of dollar Swiss, okay, using that one method of the what was that again? I forgot already. Yeah, 4-hour model. Okay, so sometimes I'm not big on daily. I'll typically switch between the 4-hour and the 1-hour scalp. What's my favorite right now? 1-hour scalp. Could that change? Might. Okay, but that's just where I'm right now. So be sure to follow the Twitter page, and it's more or less just my online trading journal. It's for myself, if no one else. And check it out, and you'll see some of the trades I've taken in the past, win, lose, or draw. And that's pretty much it. So again, I appreciate you watching. Have a great rest of your day, and take care.